These signals are provided for educational purposes only and should not be treated as investment advice.
This is Huskins with the Forex Training Professionals reporting on the trade which we sent out for educational purposes only in the live trading room. We sent out a trade alert for educational purposes to buy the Aussie JPY at 74.54 with a 60 pip mental stop and a 100 pip target. This video will explain the logic behind this trade. Um, we had good data from Australia release at 9:30 p.m. EST, and looking at the reaction from the Australian dollar, I realized that the Australian dollar had already made its up move in a knee-jerk reaction fashion, and the currency to move against the Australian dollar the most was the JPY, and that's the reason why we looked at the Aussie JPY pair. I was also aware that the New Zealand dollar was very weak, so because of the huge amount of correlation between the Australian dollar and the New Zealand dollar, going long on the Australian dollar at this point of time would not be a wise decision, even though we had news to support a long move. Uh, at At 9:30, we had three events which were worth watching from the Australian dollar perspective. We had Australian dollar building approvals which were at 2.3 versus minus 0.7 expected. With this is the first positive figure since March. We had the Australian retail sales at 0.7 versus 0.4 expected, and we had the current account balance, which turned out to be a deficit of just minus 5.6 billion versus minus 6.5 billion expected. Now, this deficit decreased on the growth of net exports, which were at 0.4% of GDP versus 0.3% of GDP expected. So all in all, the news from Australia is was bullish, and this would warrant a long Australian trade. That's the reason why we looked at the 5-minute chart on the Australian JPY, and we saw that the initial knee-jerk reaction to bid up the Australian dollar uh, was had already taken place, so we wouldn't be able to profit from this particular move which went up. Now we need to bear in mind that the Australian dollar moves more on the basis of risk aversion and risk appetite rather than on the fundamentals of the Australian economy itself. But we if we have a risk aversion sentiment which would come into the market, which would lower the price of the Aussie JPY, I would at that point look to go long on the Aussie JPY based on the fundamental factors of which I just reiterated, that the news from Australia was significantly better than expected. So this is the 5-minute chart, and on the 5-minute chart we drew a 78.6 fib level from the low point out here to the high point out here, and that level came up to be at of around 74.68, which was a very significant level, the 74.68. And having a look at this significant low, So 74.68 and 74.78 turned out to be very significant low levels, and also retracement levels of this entire move up. But we took the wrong low right now. If we taken the low of the candlestick, which wasn't a knee-jerk reaction, so let me just show that to you. The low of the body of the candlestick rather than the wick of the candlestick, we would get a price point of around 74.54 right here. 74.54, which would coincide with this low point out here. So that's one of the reasons why we think this would the 78.5 or 74.54 level would be a significant reversal point. But we do not make our trading decisions based on the 5-minute chart, and we did a top-down analysis. The top-down analysis showed us on the daily chart that we were consolidating on the daily chart, up, down, and it would be reasonable to expect the price to come down to at least the 74.0000 level. If we were to draw a trend line, the 74.00 level would hold, and it would be reasonable to expect that. That's the reason why we drew a 74.00 level on the 5-minute chart. So all said and done is that if the price does manage to come down, and even if it touches or kisses 74.00, we shouldn't worry too much about it, because on the daily chart we expect price to come down to that level in any case. Then we looked at the 4-hour chart. The 4-hour chart gave us a very significant support point, which formed a reversal candlestick pattern called the morning star, and that pattern was formed at the 74.54 level. We plotted that on the 5-minute chart. Then on the 15-minute chart, we looked at, on the 1-hour chart, we looked at the same 74.5, the 74.54 level, and at that point in time, we see a bearish or a bullish engulfing chart pattern. So this candle out here engulfs this complete candle's body, and the wicks are further than this candle's wick. So this was a bullish engulfing pattern. This led me to believe that if price comes down to 74.54, it would be a very important support level. However, we were also aware that the price would need to come down, or could come down to as low as 74.00 without it breaking the trend or breaking our analysis on the daily level time frame. So any stop loss which we put, we would need to put significantly lower than this 74.00 level. A good place to put a stop loss would be at below this wick out here, which is 73.59. But if the price closes below the 74.00 handle, it might be prudent to look at perhaps getting out of your position if the market's not making a reversal, a candlestick reversal formation on the 5 or a 15-minute time frame. For our target, we looked at the various time frames, and for our target, we settled down for the 76.54, just in case we were making a new downtrend, and this downward sloping trend line needs to be respected. So even though I might expect price to go or rally much higher, I do not want to be the last man standing, and I would exit my position at 76.54, keeping in mind, or keeping respect for this downward sloping trend line. So this is basically the analysis for today. I hope you enjoyed the analysis.